Right now, not 1973, not some history lesson. Right now, the Strait of Hormuz is shut down. 700 oil tankers floating dead in the water. Insurance companies refusing coverage. Iranian missiles hitting ships.
Oil just broke $80, and it's climbing. And every financial news channel is screaming the same thing. Buy energy stocks. Buy oil. This is your chance.
Here's what they're not telling you. In 1973, when oil prices quadrupled from $3 to $12, oil company stocks fell 35%. Exxon posted record profits. Stock price crashed anyway. The people who got rich weren't the ones who owned oil. They were the ones who owned the ships. A Greek shipping magnate named Aristotle Onassis was literally on the verge of bankruptcy, fleet sitting idle, weeks from losing everything. Then the crisis hit. He made $70 million in 1 year. Not from oil, from logistics. Because here's the truth that every energy crisis in the last 70 years proves: when oil becomes a weapon, the commodity isn't where the money is, the bottleneck is.
And right now, while everyone's panicking about gas prices and piling into energy stocks, billionaires are making a completely different play. Today, I'm going to show you exactly what that play is, using hard historical data, not headlines, and why following the crowd on this one will cost you a fortune.
Hey everyone, welcome back to Capital and Power. Listen, I know what you're thinking right now. You're watching oil prices spike, you're seeing energy stocks surge, and you're wondering, should I buy in? Am I missing out?
The answer is no, and I'm going to prove it to you using hard data. Before we go any further, nothing in this video is financial advice. This channel examines history and follows the money. What you do with that information is your decision. Always do your own research.
Now, here's what makes this video different from every other oil crisis analysis you'll see this week. I'm not going to tell you to buy oil stocks. I'm not going to tell you to buy gold.
I'm going to show you what actually worked during the 5 largest energy crises in the last 70 years, and why what worked then is the exact opposite of what the financial media is telling you to do right now.
If you want content that follows the billionaires instead of the talking heads, hit subscribe. We don't do surface-level finance here. We show you what smart money does when everyone else is panicking. All right, let's dive in with the most important lesson first.
Let me tell you a story that Wall Street desperately hopes you never learn. October 16, 1973, Kuwait City. Saudi oil minister Ahmed Zaki Yamani walks into a hotel conference room with 6 other Persian Gulf oil ministers. He tells them, "We're not asking to raise oil prices. We're not negotiating. We're setting the price right now."
Within hours, crude oil jumped from $3 to $5 per barrel. Within 3 months, $12. America, the largest economy on Earth, brought to its knees. Gas lines stretching for miles, fistfights at gas stations, truckers shooting at each other on Pennsylvania highways, the stock market losing half its value. Total chaos. Now, here's the question. If you knew this was coming, what would you buy? Oil stocks, right? Oil companies are about to make bank. Wrong.
While regular investors piled into oil stocks and watched them crash 35%, a Greek shipping magnate named Aristotle Onassis was on the verge of bankruptcy. His fleet of oil tankers sat idle. Nobody wanted them. He was weeks from losing everything. Then Suez happened in 1956, similar crisis. Then 1973 happened, and Onassis made $70 million in 1 year. Not from owning oil, from owning the ships that carry oil. Because when supply routes get cut off, the bottleneck isn't the commodity, it's the logistics. Tanker rates exploded 1,400% during Suez.
$2 million profit per voyage. Onassis went from bankruptcy to one of the richest men alive in 12 months.
Not because he owned what everyone else wanted, because he owned what everyone else needed. That's the pattern. And it's happening again right now. Let me show you something that will blow your mind. I analyzed 5 major energy crises spanning 70 years. Suez Crisis, 1956, Arab oil embargo, 1973, Iranian Revolution, 1979, Gulf War, 1990, Russia-Ukraine shock, 2022. Here's what the data shows. Energy stocks are not automatic winners during oil shocks.
In 1973, when oil quadrupled, the 8 largest American oil companies fell 35%. Let me repeat that. Oil prices up 300%. Oil stocks down 35%. Why? Because during a crisis, everything sells. Investors panic. They liquidate. They don't care if Exxon is printing money. They need cash.
Now, over the full decade, from 1970 to 1980, energy stocks returned 200%, while the broader market returned 50%. But if you bought during the crisis week, you lost money for 18 months straight. The lesson: time horizon matters. In 2022, energy was the winning play, up 60% while everything else fell 20%. Why did it work in 2022 but not in 1973? Because 2022 wasn't a systemic crash, it was a correction. In a true crash like 1973, everything goes down together. Right now, in 2026, we don't know which one this is yet. And that's why buying oil stocks today, at the beginning of this crisis, is a coin flip. Let's make this personal. If you own energy stocks right now, here's what history says. Don't panic sell, but don't chase the spike. Right now, every financial talking head is screaming, crisis, buy gold. And gold is up, sitting around $2,700 per ounce. But here's what they're not telling you. Gold isn't a crisis hedge. It's an inflation plus easy money hedge. Let me prove it. From 1971 to 1980, gold went from $65 to $850. Absolute moonshot. But that wasn't just because of oil crises. It was a perfect storm. Inflation hit 15%. The Fed kept rates low, easy money. The dollar was collapsing. Geopolitical chaos everywhere. Gold peaked at $850 on January 21, 1980. The day before Paul Volcker, Fed chairman, started raising interest rates to 20%. Then gold fell for the next 20 years. 2022, the recent lesson. War in Europe, 9% inflation, oil crisis. Gold ended the year flat. Why? Because the Fed was raising rates aggressively, and the dollar was surging. Gold at $2,700 could be the beginning of a run, or the top. It all depends on what the Fed does next. If the Fed cuts rates and lets inflation run, gold flies higher. If the Fed raises rates to fight inflation, gold stalls or crashes. The Fed's decision, not the oil price, determines if gold works. All right, so if oil stocks are a coin flip and gold depends on the Fed, what do billionaires buy? 3 things, and only 3 things. Play number 1, logistics infrastructure. This is the Onassis play, the shipping play. When Hormuz closes and the Red Sea is dangerous, every barrel of oil has to go around the southern tip of Africa. That adds 10-14 days per voyage. Shipping rates are spiking, insurance costs up 12x. Warren Buffett understands this. In 2022, Berkshire Hathaway quietly bought $12 billion of Occidental Petroleum, not because of oil, because of infrastructure and refining capacity. Play number 2, the solution to the problem. This is the Japanese automaker play.
After the 1973 embargo, American cars averaged 13 miles per gallon. Nobody wanted gas guzzlers anymore. Japanese automakers, Toyota, Honda, Datsun, built fuel-efficient cars.
By 1980, Japan surpassed Detroit in global auto production for the first time in history. Japanese imports went from 9% of the U.S. market to 21% in just 4 years. The crisis didn't move money from one oil stock to another. It restructured an entire industry.
The winners weren't oil companies. They were the companies that solved the problem oil created. Today, that might be EV manufacturers, battery technology companies, alternative energy infrastructure, energy efficiency technology.
Play number 3, real assets, with a warning. Farmland, real estate, commodities.
During the 1970s, farmland values nearly quadrupled. Sounds great, right?
Here's what happened next. Paul Volcker raised rates to 20%. Iowa farmland lost 60% of its value. 300,000 farmers defaulted. Suicide rates quadrupled. The mechanism of real assets as inflation hedges is sound. The mechanism of leveraging them during a crisis is how fortunes die.
If you buy farmland or real estate, buy it with cash, not debt. Debt during inflation crises is a time bomb. This is the first time in modern history that the Strait of Hormuz has actually shut down. During the Iran-Iraq tanker war in the 1980s, both sides attacked 400-plus ships over 7 years, but they never disrupted more than 2% of traffic. This time, full closure.
Why? Because insurance companies, not navies, control the flow. No insurance equals no commercial shipping. 700 tankers are currently anchored outside Hormuz with nowhere to go.
Qatar, which supplies 20% of the world's LNG, has halted production after drone strikes. South Korea, 9 days of natural gas left. India, 25 days of crude reserves. China, halting fuel exports. This isn't a disruption. This is a restructuring of global energy flows in real time. Here's what 70 years of energy crises prove. Every energy shock ended the same way. Not when supply returned, when demand was destroyed. Governments never solve the supply problem. They wait, or engineer, a recession severe enough to make the supply problem irrelevant.
All right, let's make this actionable. Based on 70 years of historical data, here's what you do. Step 1. If you own energy stocks, hold through volatility. Don't panic sell. Don't chase spikes. Step 2. Watch the Fed, not the oil price. Step 3. Look for the logistics play. This is the Onassis play. This is where billionaires make money. Step 4. Never leverage into real assets during a crisis. Buy with cash or don't buy at all.
Here's what I want you to remember. The Strait of Hormuz is closed, oil is surging, and everyone's telling you to buy oil stocks or gold. But history tells a different story. The people who get rich during energy crises don't own the commodity. They own the bottleneck.
If this video gave you a completely different perspective on the oil crisis, hit that like button. Subscribe to Capital and Power for more deep dives into what billionaires do when the world panics. We follow the money so you don't have to. Now tell me, what's your move in this crisis? Energy stocks? Gold? Logistics? Or are you sitting in cash? Drop your strategy in the comments. I read every single one. Thanks for watching. Stay sharp, follow the smart money, and I'll see you in the next video. Peace.